Following the latest quarterly earnings results and weaker than expected guidance, the Skyworks Solutions stock dropped 5% on a single day, though during the intraday trading, shares were down almost 11% at one point. Skyworks Solutions, with its shares traded on NASDAQ with ticker symbol SWKS, last released its quarterly earnings results on May 3rd. In this video, we'll talk about the latest earnings results of Skyworks Solutions, why the stock price dropped, and why I'm buying the shares right now. We'll also talk about the price target for the stock. Let's get into it. The semiconductor manufacturer Skyworks Solutions reported $2.63 earnings per share for the quarter, meeting the Thomson Reuters consensus estimate of $2.63. The business had revenue of $1.34 billion during the quarter compared to analyst estimates of $1.3 billion. This revenue is up 14% year over year. The company has net income of $305.8 million, which is down 5.9% from Q2 of 2021. It is forecasted to post earnings per share of $8.43 for the next year compared to $9.07 last year. Skyworks Solutions had a net margin of 23%, which is down from 28% net margin back in Q2 of 2021. The decrease in margin was mainly driven by higher expenses. Over the next year, revenue is forecasted to grow 11% compared to a 21% growth forecast for the industry in the US. This weak estimates and guidance played a big part in the stock price drop. According to CEO of the Skyworks Solutions, Skyworks delivered record second quarter results with double-digit year-over-year growth in both revenue and non-GAAP earnings per share. Broad market revenue was particularly strong, driven by accelerated demand for our Internet of Things and automotive solutions, underscoring our continued diversification across the entire Skyworks Solutions portfolio. Moving forward, we are well positioned for future growth and robust cash generation, underpinned by industry-leading manufacturing capabilities, continued investment in cutting-edge technologies, and design win momentum over an expanding customer set. For the next quarter, and despite recent pandemic-related supply chain disruptions, Skyworks Solutions expects earnings growth in the June quarter, as well as double-digit year-over-year revenue growth. According to the CFO of Skyworks Solutions, in the third fiscal quarter of 2022, they anticipate revenue to be between $1.20 billion and $1.26 billion, with non-GAAP diluted earnings per share of $2.36 at the midpoint of revenue range, representing revenue and non-GAAP diluted earnings per share growth of 10% compared to the third fiscal quarter of 2021. There are a number of key considerations why I'm buying shares of Skyworks Solutions at this time, despite the stock's recent poor performance. First, over the last 3 years, on average, earnings per share for Skyworks Solutions has increased by 22% per year, but the company's share price has only increased by 11% per year. This means the share price is significantly lagging earnings growth, and there is considerable room for it to grow. Second, the company's sales to Apple and Samsung Electronics have remained solid throughout the quarter and could still have an upside once the Chinese market picks up its pace. Third, from a fundamental perspective, Skyworks Solutions continues to be a solid business. Their number of shares outstanding is showing a nice declining trend and now is at 166 million shares over the last 12 months. As for their return on equity, which measures how many dollars of profit a company earns for every dollar shareholders have invested in the firm, they're at 28% over the last 12 months, which is well above the minimum preferred return of equity of 15% for semiconductor firms. Also, their return on invested capital, which divides a firm's profits by the money both equity and debt holders have given the company to gauge management's capital allocation skills, shows to be at 20% over the last 12 months, which is well over the preferred 12% minimum for this metric. There are currently 21 analysts on TipRanks covering the stock, with 10 of them having a buy rating and 11 a hold rating, giving the stock an overall moderate buy with an average one-year price target of $147.63, which suggests an upside of over 30% for this stock. The Skyworks board of directors has declared a cash dividend of 56 cents per share of the company's common stocks, which is payable on June 14th, 2022 to the shareholders of the record at the close of business day on May 24th. The company is considered a safe dividend payer and is currently has a dividend yield of almost 2% and a market cap of $19.3 billion. The company has a forward dividend payout ratio of only 18%, which is considered low for semiconductor firms and gives it a lot of room to continue to pay and increase its dividends. Skyworks Solutions has been paying and increasing its dividend over the past 7 years, and it's considered a very fast dividend grower. With its dividend yield 40% above its 5-year average and a lower than usual forward price to earnings ratio of only 9.4, which is way lower than their own 5-year average PE of 14.5 and compared to its sector PE of 17.9, Skyworks Solutions appear to be quite undervalued at this time, and that could be a decent time to invest if you believe the company's long-term outlooks is solid. That's why I went ahead and bought 3 shares of Skyworks Solutions today in my registered retirement savings plan account, bringing my total number of shares to 4. Although shares of Skyworks Solutions are down almost 35% in the past 1 year, I'm super confident of my buys at a perfect time and believe this investment will return well in my retirement planning account, which has a long-term horizon. Are you buying shares of Skyworks Solutions stock at this time? Let us know in the comment section down below. If you enjoyed this video, please give it a thumbs up and subscribe to Moementum Finance channel for more stock market investing videos and to learn more about ways to reach financial independence. Thank you, and I hope to see you next time.